Now, which would you have rather owned, A or B? A averaged almost 7% annual return for the period starting January 2000 through June of 2023. It actually lost an average of almost 1% per year for the decade starting in 2000 and ending in 2009. B, on the other hand, gained an average of 11.79% over that period, almost 5% a year better than A over that 23 and a half years. Plus, it made an average of over 12% during the decade that A was losing money, and 11% in the years since. So B had the higher return over the entire 2000 to 2023 period, and the more consistent result in each sub-period. Now, B certainly looks superior. So why is it that A is far more popular choice today than B? Now, both A and B are broadly diversified indexes following different portions of the stock market. The obviously weaker A is so popular right now for a very simple reason. It's been doing a lot better lately. Now, we're all prone to cognitive biases, and one of them is called recency bias. Now, one of the ways this pops up is when we take recent performance and assume that it's going to continue. We assume a poorly performing holding will continue to be weak, or a strong performer will continue to do very well. Now, the result of this could be something called returns chasing, buying more of what's been hot lately, thinking that's going to continue. This could be detrimental to our results over time. The downside to being diversified is you're always having portions of the portfolio that don't look as good as others over any time period that you examine. If you don't accept this as a normal state of a good portfolio, you could be tempted to tweak things, and that often hurts more than it helps, as what's hot turns cold quickly. The most reliable way to navigate markets over the long term has been and should remain to invest, not speculate. Stay diversified, patient, and disciplined, and a better than average result is the likely outcome. Now, we have more on this, including a recent study by Morningstar and a link to a CNBC article in which Charlie Fitzgerald shares some thoughts on recency bias. It's in the post on our website titled, "Is there a downside to diversification?" Now, also in that post is a rundown of other Q&As that we produced for various media, stories in which we served as sources, and some news items of note, including Mike Salmon being named to the 40 under 40 list of the national publication Investment News. Now, as always, if you have any questions, please contact us. We'd love to hear from you.